Hi guys, welcome back to the YouTube channel. In this video, we're going to be talking about the temporary non-residence rules, or probably the 5-year rule is what it's often termed as. So the temporary non-residence rules, what are they and how do they work? Well, the first thing is this applies to UK taxpayers. So if you're watching this from anywhere else in the world, not the UK, this probably doesn't apply to you. And broadly, what this does is it's a form of temporary anti-avoidance the HMRC put into place in order to stop people just going overseas for one tax year, basically crystallising loads of gains, putting loads of money out of their companies, returning back to the UK, having not paid tax on it, and actually, secured a massive tax advantage by doing so. And broadly, the way that it works is the type of income and gains that you can manipulate are caught by this. So dividends from your company, if you're a closed company, certain capital gains as well, potential pension fund income, and basically where you have the ability to decide when and where that income's paid, the chances are it's caught by this. A great example of this would say, for instance, you've got a UK limited company at the minute with £1 million worth of retained earnings. You think, okay, great, we'll go to Dubai next tax year where there's 0% income tax, pull the full £1 million out. If you were then go back to the UK within 5 full tax years, well, actually that full £1 million worth of income that you've pulled out of the company would be taxed in the year that you go back to the UK. So that's where the 5-year rule comes into it. So what you really need to do is look to see, well, before you take any money out, are you going to be able to be non-resident for the full 5 years? If so, well, if you can't, then you basically need to minimise what you're taking out. And there are certain caveats to this as well. So salary payments, if you pay yourself a salary from your business, that's not caught by this anti-avoidance legislation, so you can continue doing so. If you take £100,000 salary from your business, but no dividends, then actually you're fine, you won't get caught by these rules. But it's just the pre-departure profits that relate. So all of the money, that full £1 million in this example, that was earned in the period where you or the taxpayer were UK resident, that's caught. There's also the post-departure profits side of things as well, where if you're 1 million, but you've got the 1 million of retained earnings when you leave the UK, you come to Dubai and then next year you earn 200,000 a year after that, those profits you earn whilst you're non-resident, you can actually take them out tax-free. So it's important to separate your pre-departure profits to your post-departure profits, because it's the pre-departure profits that are caught by this temporary anti-avoidance rules, the temporary non-residence rules, and the post-departure profits and the salaries, they're not caught by this. So you're fine if you're just paying out those, but if you're going for the pre-departure, that's where you're caught by the 5-year rule, and you need to make sure that you basically completely avoid the UK and become a UK resident for at least 5 years. But it doesn't just apply to income and dividends, it also applies to capital gains as well. So a great way to really reduce your taxes, especially as a wealthy and successful entrepreneur, is prior to selling your company, becoming non-resident. In the UK, you've got business asset disposal relief at 10%, which only covers your first 1 million of capital gains. But if you're selling your business for 10 or 20 million, there's actually still going to be a significant tax bill there because of the capital gains tax rates being as high as 20% for the vast majority of business owners. So if you're selling your business for 10 million, the capital gains on that is roughly going to be about 1.9 million. However, if you were to go somewhere where there is no capital gains tax, again, Dubai being a fantastic example, that full 1.9 million can be completely tax-free, but you have to be non-resident for the full 5 tax years. Otherwise, that full gain will be taxed when you go back to the UK. So for a lot of business owners, this is definitely worthwhile doing this, because for £2 million, the tax saving there, if you were to come to Dubai, for instance, basically spend, say, £400,000 a year living here in Dubai, you do that for 5 years, you're going to break even, and really to spend that amount of money in Dubai, that's going to be a pretty decent lifestyle for that 5 years just to break even. If you do it on a reasonable basis, where you're probably spending an average amount of income in Dubai, you're probably looking at 200,000 for a normal family. And then you've also got the other income that you're generating as well. So if you're doing consultancy work, you've got other businesses, all of that income will be tax-free whilst you're in Dubai as well. So there's really the kind of two-faced approach to it, where you're getting the first benefit of the capital gains tax and then the second benefit of the income tax as well on top. The rules apply from when you become non-resident. So if you become non-resident on a split year basis, you need to consider that and basically determine the exact date you can go back to the UK as a UK resident. Of course, because of the amount of tax at stake, it's definitely worth getting good professional advice on this to make sure you don't do it 1 or 2 days too soon, because fundamentally if you come back 1 day too soon, it could be a case of that your entire capital gains plus any post-departure profits or any pension scheme funds that you've realised, all of that could be taken into account by going back 1 day too early, and you could potentially be hit with a massive capital gains tax, income tax bill and so on. But if you do want to find out more about how to structure this for you in your business, actually click that link in the comments below and book a call with myself or one of the team where we're going to run through the Tax Smart Wealth program and how it can benefit you in terms of looking to internationalize your lifestyle, reduce your taxes and build offshore wealth. Hope you found this video useful. Please do give it a thumbs up and remember to tap that subscribe button. Bye for now.